Good morning. Welcome to Trading Hour. It's midweek. I'm Reema Tenduka. With me, Surbhi Upadhyay, and markets are flat. The benchmark indices, but that's masking the intraday recovery. The Nifty has recovered 100 points from the day's low and now come up to levels of 22,450. The Midcap Index is at the day's high, and the Midcap Index has put in a 3 percentage point plus rally in this week itself. So that's pretty remarkable.
That's telling you where the action is, right? It's really gone back to the broader markets. And if Reema was wearing red, then we'd be perfectly matching the screen above us as well, because it's some green, some red. That's the kind of day that we have. But for what it's worth, trends are very difficult to define and hard to come by in the mid-caps, in the large cap space. Because you've got stocks really moving all over the place today. So what's leading the recovery? You've got some of the major names from IT. They are doing their bit. So, for instance, TCS, HCL Tech, Wipro, a lot of these stocks. Remember, the sell-off happened after the Accenture caution, the cut of the Accenture guidance. Since then, there's been some recovery, and they're trying to approach numbers with some amount of optimism. So that's one part. Then you have, some banks, not all. HDFC Bank is a big contributor today on the upside. It's having a decent session. But if you look at the others, let's pull up an ICICI Bank. It's very, very flat, not doing too much. SBI is down a bit. So again, trends are very mixed. Let's just pull up the contribution plate. That will, I think, tell us the picture in the simple manner. You have a lot of heavyweights, Lever, L&T, Reliance. All of them are dragging. They're not really helping the market right now. But like I said, there is a little bit of, IT, a little bit of pharma that's really working out very well. That's the large cap picture, absolutely flat, Reema. But I guess, like you're saying, it's all about individual stocks, individual movers and shakers, news flow, and brokerage commentary.
Oh, absolutely. And Nifty IT Index, which you spoke about, that's the one which is currently up close to about 1%. So it doesn't make it in the top contributors list, but as a sector per se, if you look at it, IT is actually doing quite well. But let's invite Aditya Sood from Incred PMS on the show now to discuss some market ideas. Aditya, this has truly become a a bottom-up kind of market. It's always been that, but I think now more than ever, as over the last few months, we've seen the index stall, we've seen volatility pick up, and the focus on quality, whether it's large cap or small cap, has become paramount. So in the last 1 month, how have you approached the market? What are the changes that you've made to your portfolio?
Sure. So, as a starting point, I think a correction was widely expected by bull markets. Corrections are very treacherous. They are sharp. Obviously, it gives us time to, position ourselves well for our investors. Obviously, so there is a two-pronged strategy that we have followed. One is that we have resorted to, buying more of the stocks that we really have conviction. And what we saw in this correction period over the last 2-3 months has been that a lot of small mid caps corrected by 25-30% from the peaks that they made 3 months back. So we resorted to some sort of sizing, wherein we added to Neural Labs, Tejas Network, Intellect Design Arena, and these are long-term structural stories that we have invested into. The second element of our strategy has to do with, buying into stocks wherein there have been near-term earnings headwind. And last 4 to 6 quarters, obviously, earnings have disappointed. This includes, building material names like Finolex Cable or HIL to that matter. So what we firmly believe is that, some stocks can correct by 30-50% in a bull market. And one needs to capitalize and position ourselves, for the next leg of growth in these companies. So this is a two-pronged strategy that we are focusing on. Within this, we have a very large overweight stance on consumption. So we have added a name known as Arvind Fashion, essentially, and that is obviously, catering to the premium and the mid-market end of the consumption.
So Finolex Cables and HIL, you believe these are some of the stocks that you like, right? Where you believe the contraction, the pressures are behind the company.
Yeah, that's correct. If you look at Finolex Cable as a case in point, we are extremely positive on the prospects of Bharat Net, and that is why we have a holding in Tejas as well. I think so. If you look at the optical fiber cable side of the business, there are large tenders which are due on the BharatNet side. Secondly, what we have witnessed is that, Finolex continues to execute well. And obviously we had, a 3-5 year underperformance for the stock, and subsequently the stock has really done reasonably well. So we do believe that on the building material space, there are certain plays, particularly in cable and wire. The company has got decent cash on the balance sheet, and it has got a holding in Phenolics Industries as well.
Okay, so Phenolics is a play on the whole building material space, and Tejas, as you mentioned, it's the whole BharatNet prospects and optic fiber. That's sort of the play over there. Got it. Aditya, I remember, when we spoke a couple of months back, I think at the start of the year, at that point, two-wheelers was a space that you really liked. Now, I don't know if you're changing positions now because, they've been the best performing stocks as well. And now the March month was a little lackluster for most of the two-wheeler majors. But what's the sense now? Have stocks already priced in the best possible scenario?
So we have been fairly constructive on the two-wheeler space for last year and a half, actually, and that includes both OE as well as the auto anch two-wheeler. I think so. We have just seen, two-wheeler sales picking up, and this is got to do with our more or less overweight stance on rural consumption. I think so. One of the things which has not been highlighted by most people is that gold has done well as an asset class, and what we expect going forward. Obviously, rural has a very large exposure in terms of balance sheet repair through gold. We have seen 2 years back to back wherein gold returns have been in double-digit sort of a number. The second element of rural growth balance sheet repair is obviously the real estate prices. We are seeing certain categories wherein, interestingly, the consumption levels, and this is being highlighted by the recent AC Nielsen data which came through in terms of volume growth of staples. So we have been fairly constructive on the low unit consumption thesis side. We believe that there is significant room for same store growth for companies like V-Mart, which recently reported a very encouraging number, and Dabur obviously has been reporting a decent number in terms of, these are two companies which have had more exposure towards tier 2 and tier 3, and that is why I'm highlighting. So clearly, I think so volume growth is going to be the key for most of these categories, and we will have a similar sort of stance, flowing through. So this thesis flows from two-wheeler, getting spilled over to low unit consumption. So we are fairly constructive on both the spaces.
That's pretty interesting. Just take that point forward. So the play here is rural recovery, and that should, you're saying, spill over from two-wheelers into other mass consumption as well, because that's the laggard pocket of the market, right? So any specific calls on FMCG? Are you looking to add any on your portfolio? Because that's been the biggest underperforming part of the market for the last year and a half.
Yeah, so obviously, one of the ways is obviously to play it through building material. If somebody is not playing it through a real estate theme. The second theme is obviously staples. I think so valuations are much more constructive here. So Dabur and HUL is something that we have in the portfolios, but all the categories on the consumer durable side as well, which are exposed to low unit consumption. Recently we added into Orient Electric, which is obviously has a market leadership position in terms of fans. So we believe that there are very interesting ways to play the rural theme, and obviously there is an element of mean reversion. We do believe that when we are buying into these sort of companies, earnings growth. Secondly, we also do believe that over a period of time, the multiples will expand, and these are the pockets, interestingly, which have also underperformed over the last 3 to 4 years.
Just to get back to that point about rural, when you look at the Hero MotoCorp sales numbers for the month of March, they were still very disappointing. Sales were down 5 to 6%. So that's not tying in with the expected pickup in rural spending and plus the pre-election kind of, spending that comes through. So how do you marry that data point that's come through from Hero MotoCorp?
So the first point here is that, it is not really realistic to look at, 1 month's number and make a logical conclusion out of it. So for example, if I have to draw a parallel, you look at what Maruti is reporting, essentially. So all the growth was coming from the premium end. Now what we are seeing is that, volumes for a company like Maruti have also started to pick up, particularly at the lower end in terms of pricing points. So what we essentially are seeing is that, we are at a very, very early stage, and it is not, I mean to say, it is very logical to expect rural to outperform an election year. One has to bear that as well in mind.
Okay, all right, Aditya, good speaking with you today. Thanks very much for all the perspective and, giving us the thought process behind a lot of your holdings and the pockets of the market that you like. So that is Incred PMS and how they're positioned on the market. We do need to take a break. On the other side, we'll come back with today's big commodity headline. Brent oil prices are nearing $90 a barrel. So what's going on? Manisha Gupta will fill us in on the latest. Well, one of the reasons that global markets are a bit on the edge is because of higher crude oil prices and obviously the whole fear on inflation coming back and US yields moving higher as well. In fact, Brent oil prices are nearing $90 a barrel once again, which is a 5-month high. Let's take a look. Yeah, 89.09. Let's go across to Manisha Gupta to understand what's going on. Manisha, slowly, this commodity has just been creeping higher. So what are the factors at play here?
Oh, well, yes, it's been doing that very, very gradually. So when you look at the prices currently, you have the Brent crude prices, which are trading at 89, up by 15% in this year until now. But the WTI crude prices trading above $85 is up by nearly 18% in this year. So the run-up has been quite strong in that sense. The reason that you're looking at the prices at a 5-month highs is that the US inventories have continued to decline. This is going to be a third straight weekly decline for inventories. So that tells you that even with the US production at near highs, you are looking at the physical demand picking up as well. That has been supportive. And then there are supply disruptions in Russia. We do understand that because of the Ukraine drones, nearly 10 to 12% of Russian refining capacity has gone down. That has been keeping the prices higher. Mexico, which is a non-OPEC country, also is cutting its exports, and that is another factor. There are fears of broader conflict in Middle East, with the latest statements coming in from Israel, has added some more premium to prices. And then it is also about OPEC and allies meeting today, where the expectation is that they might not change production in any sense. 2.2 million barrels per day of a cut have been extended until end of June. But any statement that comes out from OPEC could be supportive in case of crude oil prices. Having said that, most of the markets right now do suggest that $90 to $95 of a barrel is where you could be looking at the crude prices in this quarter itself. So markets are building longer positions right now. On the Indian exchange MCX, we're already trading at an all-time highs right now, and there is strong support that the street expects going further as well.
Thank you very much for that. In fact, staying with the subject of, crude prices, the global economy and where rates are going to be by the central banks. Earlier today, we chatted with Jahangir Aziz, Global Head of Emerging Market Economics at JP Morgan. Listen in to what he had to say about RBI's rate cuts and emerging markets.
I think the concern isn't so much that inflation is going to spike back up. Core PC has been reasonably well behaved. It's just that last mile problem where can US get inflation down to that 2% core PCE number and sustain it there. I think that's where the market is concerned with. But as far as the policymakers are concerned, you should listen to Chair Powell or you listen to the officials around the Fed. Chair Powell's view has been guiding us, I think, to a June rate cut. That's what we have. Probably about 3, maybe a little bit more, but 3 is what we have in our baseline. I think the earliest you would see is probably a July rate cut, but it's going to be a very shallow rate cut. China was the only one that had these $1 trillion to market cap companies. You take China out of this mix, then in the rest of emerging markets, you do not have places where you could put in reasonable amount of large capital inflows, i.e. that the absorptive capacity of emerging market equity markets has been very, very shallow. If you think about market cap in India, market cap in India is about $4 trillion US. You have a company in US called NVIDIA whose market cap is $3.5 trillion. So I think size matters in these things. China has the equity capacity. The other emerging markets don't have the equity markets do not have the capacity. You can't put in more than a certain amount of finite money in non-China emerging market equity markets. We have done that. Now we are looking at concerns of overvaluation.
Okay, let's get into a break. But as we do that, here is an important notice for all our viewers. Please be cautious of fake accounts on social media platforms. Our anchors do not endorse or recommend any stocks. Exercise caution with direct messages from unfamiliar accounts. Follow us only on our verified accounts and catch all CNBC TV18 news and updates on Facebook, X, Threads, Instagram, and JioCinema. Welcome back. While Nifty IT is up nearly 1%, Midcap IT is on a roll. Tata Elxsi is up nearly 5%. Tata Tech, which entered into that partnership with BMW yesterday, is extending its winnings. So yesterday it ended up with a gain of 4.5%. It's followed it up with another 4% up move. And this week itself, in 3 days, it's an 11% gain on Tata Technology. Not still quite at the 52-week high, which is a level of 1400 that it hit very close to that listing time. But, Tata Tech has been on an up move. Zensar Technology, which is disappointed on its earnings for the last 2 or 3 quarters because of its exposure to high tech. Zensar Tech is also seeing some buying, L&T Technology Services, Cyient. So across the board, you are seeing buying coming through in Midcap, IT today. But let's get back to the markets and where we are headed. It's going to be an important year. We start off with the earnings next week, and then we've got the general elections. We spoke to Sunil Kaul, the APAC equity strategist at Goldman Sachs, on how foreign investors are viewing India in light of, ahead of the general elections and the earnings and the recent correction that we've seen. Are investors a bit concerned? Have they pulled money out of India? Listen into what Sunil Kaul had to say on that.
The primary concern around India in terms of clients has been around valuations. Although I would say our core view is still positive on India. We still think that the fact that fundamentals are strong, earnings are coming through, that should offset some of the concerns around valuation. So we still like the market. Beyond those large gaps, there's also the theme of kind of high-end consumption, affluent India, as we call it. There is a theme of Make in India. There is a defense theme going on. We also are very bullish on the real estate cycle, and we think the best way to play that is through the building material or the late cycle construction materials. So if you go through these themes, I think there are enough themes within the market which investors can play. We, as I said, metals, we're kind of more neutral there. We do like, if you club utilities in the broader commodity spectrum, we do have an overweight on utilities, which is more a thesis around sort of peak power shortages happening and focus on renewables. So that's another way to play that. Where we are most cautious on within this sort of cohort is the oil marketing companies, where we think there is still pressure both on refining margins, but also on the marketing margins. So I think the March quarter numbers and the 1Q reporting season, which will just start, I think the numbers may still be a tad softer, obviously given the guidance from Accenture as well. But we think March will be better than December already. And going into the second half of the year, we think numbers will start to improve much more materially.
Goldman Sachs had recently upgraded their view on Indian IT to a neutral. They believe that in the December quarter, earnings for IT companies had bottomed out, and we will see it's not going to be a big improvement in the March and the June quarter. There may be an incremental improvement, but he does believe by Q2 of FY25, that's the September quarter, we will see a pickup in demand. That's the view coming in on IT. But we also asked him his view on Fed and how many rate cuts is he penciling in, and also about the RBI monetary policy since the MPC meeting has begun today. Listen into what he had to say.
I think we still are in the June cut camp. I think that the Fed rate cut cycle starts in June. I think having said that, so we're kind of penciling in 3 rate cuts this year. For RBI in particular, I would say, I think the key, obviously we expect them to stay on hold in the policy meeting later this week. Obviously, they'll be probably sounding more optimistic on growth, commit the 4% inflation target eventually. Our own sense is that this quarter you will see liquidity easing much more, and eventually RBI starts cutting rates in third quarter of this calendar.
All right, so that's the Goldman Sachs view on the Indian market as well as their expectations on rate cuts. Let's move on and, as promised, get you some trading ideas as well. We have Mitesh Thakkar joining in. Mitesh, hi, good morning. So it's a more flat screen today. Tell us, do you right now have any trades going on the index? If not, what about stocks?
Morning, sir. See, I think earlier in the day I said buy on declines. Today morning we got that dip. We had an entry and we took some profits as well because the bigger breakout will happen about 22,530. I think, once we see the Nifty get past those levels, the earlier highs, then I think we're into fresh all-time highs without any supply pivots. So I think that will be a bigger trade. But for the timing, trading for small profits if you're trading on the index. So try to buy closer to 22,300. Take profits on any 100, 150 point kind of bounce back. And on the stock side, I think, I have... I have a buy on Voltas. I think that's something, which has seen good continuation today. So buy here with a stop at about 1190 for targets of around 1260 on the upside to begin with, though I suspect eventually the stock can do higher levels as well. And the other one is Coromandel Fertilizers, which I would recommend buying with the stop at about 1110 for targets of 1170.
1110 with targets of 1170. Got that. Okay, thanks, Mitesh, very much for the trades. We'll come back and touch base with you a little later in the afternoon. Right now, we do have to take a very quick break. Come back on the other side, and we have lots more lined up for you on the markets. But as we take the break, here is something that you must not miss out on. CNBC-TV18 presents India Exchange, where market experts and industry stalwarts will collaborate in insightful discussions on India's economic path and the evolving dynamics of the Indian market, mapping the macros with Citi India economist Samiran Chakrabarti, catch a jugalbandi between market veterans Manish Chokhani and Ramdev Agrawal, return of the animal spirits within India Inc., a conversation with the V. Vaidyanathan of IDFC First Bank, Keki Mistry and Manish Kejriwal of Kedara Capital, and chasing alpha with market experts like Nilesh of Kotak, Prashant Khemka of White Oak Capital and Anish Tawankle of ICICI Prudential Mutual Fund. Don't miss out on this. Tune in to CNBC TV 18 on April 4th. That is tomorrow, 5:30 p.m. onwards. Welcome back. It's a pretty quiet screen as far as the large cap space is concerned. If you talk about the broader market and where there's some traction, look at something like Bajaj Hindustan, Lemon Tree Hotels. These are some of the names where you're seeing some green. These are, of course, price and volume moves that we're talking about. Nalco is doing very well from the PSU space, metals and PSU. So that's a good one. GAIL is having a good session. So again, if you're talking about gains, then it's more PSU names that are really popping up on the screen. Otherwise, it's a little quiet in the broader market as well. But as promised, let's now shift focus to a lot of individual stock-specific action. And speaking of stocks, there'll be a new one that will list very, very soon. This is primary market action that we're talking about. Telecom service provider Bharti Hexacom's IPO will open out for subscription today. The issue is an offer for sale where the government entity TCIL is selling a part of its stake in the company. And Rima has moved to the wall now to give us more details about the company and the issue itself. Rima.
Thanks so much for that. So Bharti Hexacom, the first IPO of FY25 and also the first IPO from the Bharti Group in over a decade. The last one was Bharti Infratel, which is now known as Industars, way back in 2012. So there is considerable excitement. But let's get to the IPO details then. The IPO opens from the 3rd to the 5th of April. The price band has been set at 542 to 570, giving it an implied market capitalization of 28,500 crore at the upper end. Now, this is a pure offer for sale, which means no money will go into the company. Now, who's the selling entity? The selling entity is the Government of India, an entity called TCIL, Telecom Consultants India Limited, which will sell half of their holding. They have 15 crore share. They're planning to sell 7.5 crore share and overall raise about 4,200 crore rupees. Now, Bharti Airtel is the promoter. They have a 70% stake in the company, but they're not planning to sell any stake. Now, about this company. Now, this is your telecom service, telecom company. It provides mobile services, but unlike, say, a Bharti Airtel, Jio, Vodafone Idea, which are pan-India players, Bharti Hexacom operates only in 2 circles in India: Rajasthan and Northeast. Now, in Northeast, the company is a market leader with a market share of more than about 50%, while in Rajasthan, it's the second biggest player with a market share of about 40% as of December of 2023. The company was originally incorporated way back in 1995 as Hexacon India. Then in 2004, its name was changed to Bharti Hexacom Limited, which is when Airtel had acquired a majority stake in the company. Now, this company pays a management fee to Bharti Airtel for common marketing, admin, personnel expenses, and this is approximately about 1.7% of its revenues as of the latest numbers. Now, on to the financials. The company's top line has grown at a CAGR of 12.65%. So revenues now, as of the last year, stand at 6,580 crore. But the big positive has been the margin improvement. And look at the margin trajectory. Margins in FY21 were sub 25%, and they've risen to nearly 50% as of 9 months FY24. And the margins of the company have basically doubled. Yet, the bottom line of the company has been fairly volatile on account of exceptional items. The big driver of the margin increase was a price hike, which took place about 2.5 years ago, which led to the ARPU of the company. ARPU's average revenue per user rising from 135 in FY21, 155 in FY22, and now it's nearly touching the 200 rupee mark as of 9 months of FY24. Now, it's a fairly big IPO, but what one needs to remember is that it operates only in 2 circles. So the customer base has not been growing at a very fast clip. Growth for the company is coming from upgrading its existing 2G subscribers to 4G and price hikes. Valuations then, now FY23 EPS of the company was about 11 rupees, which means at the upper end, we're getting a trailing PE of 52 times. So it's cheaper than Bharti Airtel, which on a trailing basis is at about 80 times plus. But remember, Bharti is much, much bigger in size. Bharti Hexacon's top line is about 6,500 crore. For Bharti Airtel, it's 1.4 lakh crore rupees. Back to you.
All right, Rima, thanks very much. That was comprehensive. So we're going to watch out for this new kid on the block. Well, new, maybe old, because the parentage is very, very old, of course. But we've got a full house now. Our entire team is with us to take us through a lot of the interesting stocks that are buzzing around in trade today. We've got Nigel joining in. He's looking at a bunch of metal names and UltraTech Cement. And I know Sonia has been looking at Bharat Forge because of those North American Class 8 truck orders. And Hormaz, as always, has his eye on some interesting brokerage notes. So, guys, thanks for joining in. Nigel, let me start with you. Let's go over some of the business updates, production updates that came in from some of the miners.
Well, let's start off with Nalco then. You know, they have said that the FY24 was a brilliant year for them and they were smashing records. So let's run you through the records. In terms of the FY24 performance, the aluminium numbers, they delivered their highest ever metal sales. And that's at around 4.7 lakh tons. That's optimum utilization levels. Moving to alumina, which is bulk of their profitability. Well, out there, they produced at more than 100% capacity utilization levels. So they have delivered a number of 2.1 million tons, which is phenomenal. And besides producing well, they're doing it profitably as well because they had the tailwind of the coal block. The Utkal D coal block got operationalized and it contributed to them as well. And that's what's going to help them out because that's a captive source of coal. They've also said that they've reached 2 million tons of optimum levels. So that's good news. Moving to MOIL, they as well said that they reported a record year in FY24 and it was even better than their last best record, which was FY 2008. Well, in terms of the production number, it's up by close to around 35%, coming in at around 17.5 lakh tons. And that's even better than the 13.6 lakh tons that they had done a few years ago. In terms of sales, well, that as well is up by close to around 30%, coming in at around 15.4 lakh tons, which is much better than what they delivered in FY 2008, which was at around 13.9 million tons. EMD, which is a smaller part of their business, that basically goes into batteries and it's an import substitute. On a small base of that grew by close to around 28%. So good going on MOIL as well. And finally, Hindustan Zinc, that's the only play on pure silver out here. And the silver volumes actually have done well. But before that, let's just tell you about they delivered their highest ever quarterly refined metal of around 270,000 odd. That's on account of better plant availability. The zinc production, that's up by close to 2% on a year-on-year basis, but on a sequential basis, that's up by close to 9%. And lead was higher as well on a sequential basis. The silver production, though, that's very encouraging. And I've been making this point for the last few quarters. Silver is the one that is ramping up, and that's the one that's going to give them a higher multiple. Well, that came in higher by close to around 4% on a year-on-year basis. It clocked close to under 198 tons for the last quarter, and for the year it was close to around 750 tons. So the tailwind that you're getting in for Hindustan Zinc is both on the volumes and also silver prices overnight, as Manisha was saying, has done quite well. So that's the reason why that stock is up and about. Float as well, very limited out there.
Nigel, thank you very much for that update on those individual stocks. Moving on to Bharat Forge, that's under pressure after North American Class 8 truck orders fell by 9% year-on-year in March. Sonia, give us more details.
Well, thanks a lot for that. So as you rightly pointed out, there was a fall that we've seen both year-on-year as well as month-on-month in the North American truck market. And it's not a small fall. Month-on-month is over a 20% fall that we've seen. And year-on-year, there's a 9% fall as well. The Class 8 truck orders, in fact, compared to what we've seen in the month of February, is a 33% fall. Now, Bharat Forge has about 11% of an exposure to the North American truck market. And it's not just in North America, but the truck market globally has seen a bit of a moderation in growth, including in markets like India. So this is also on the back of a high base and some cool off in terms of demand. Hence, Bharat Forge is under pressure. Others like Ramakrishna Forgings also get impacted because of the slowdown that we've seen in the North American truck market. In fact, the orders have slipped below the 20,000 mark, for the first time since August of 2023. And this is the fourth or fifth consecutive month of a fall that we've seen in North American truck orders. Back to you.
I remember Bharat Forge, when they came out with their Q3 numbers, had also indicated that things will slow down even going ahead in Q4 and in FY25. So they'd already raised the caution when it came to exports. So that's Bharat Forge for you. But let's move on now to Hormus. He joins in with all the brokerage notes that you need to focus on for the day. Hormus.
Well, ahead of the IT companies starting to report earnings sometime next week, CLSA has come out with a note, and they mentioned that among the large IT firms, it is expecting TCS to top the charts when it comes to constant currency revenue growth for the quarter. But on the flip side, they are expecting companies like Infosys, Wipro, LTI Mindtree and Tech Mahindra to report a revenue decline this quarter. So some caution coming in there from CLSA. But why they are expecting TCS to report the highest constant currency growth is because of the ramp up in the BSNL order that they had received late last year. So as that ramps up, it will aid the business for TCS going forward. And as a result of which, CLSA has cut EPS estimates by up to 11% for between FY24 to FY26 due to the delay in the revival of discretionary demand. And based on that, they have upgraded TCS and HCL Tech to underperform from sell. It's not a bullish call, but they've just upgraded it one notch higher. They've upgraded Tech Mahindra to a buy from an outperform rating. They've maintained outperforms on Infosys as it is entering a stronger growth phase as they have some deals lined up in the first quarter of FY25, and they have retained a sell rating on LTI Mindtree and Wipro. Aside of that, HSBC has come out with a note on Asian Paints. They have maintained their bullish call there, but they have cut their target to 3750 from 4,020 earlier, and they said that a possible pricing disruption in the paint sector and margin erosion prospects are weighing on the stock price. Adding to that is the commentary from Grasim. Remember, they want to have 10,000 crores of revenue, turn profitable in 3 years. That is adding to the headwinds for Asian Paints, but HSBC believes that the current pricing strategy that Asian Paints has is sensible and the fears surrounding the stock are overdone. As a result, they have maintained their buy recommendation. And lastly, UBS on Chola Investment Finance, they have assumed coverage there with a neutral rating, a price target of 1290, and they say that Chola is better placed compared to peers in a weak funding cycle, and that is because of a 26% EPS CAGR over FY24 and FY26 and a largely secured and a long tenured loan book, and with a continued diversification in its products as well. But why they are neutral is because the current valuations of Chola, which is around 4.2 times price to book of FY25, are stretched, and they are at a 24% premium to their long-term average of 3.7 times, as a result of which they remain neutral with a price target of 1290. Back to you.
Okay, all right, got that, Hormus. Thanks very much. Those are all the key brokerage calls that are in focus today. Back to Nigel, UltraTech Cement is in focus. There's some green on the stock as well because the company has commissioned 2 new greenfield plants. Nigel, tell us more about this.
Well, I recall when you had a new entrant that came into the cement space, people were worried that a formidable player like the Adanis, they're coming into cement and will pose a challenge to UltraTech Cement. I'll tell you what, UltraTech Cement said, let's up our game and let's continue to be the king of the pack. Now, they've gone ahead and they've commissioned a 5.5 million ton unit. That's a greenfield unit at Chhattisgarh as well as at Tamil Nadu. And in the last 12 months or so, their total capacity has moved up by close to around 18 million tons. With this addition, their current capacity has moved to around 151 million tons. And they have put it into context. They're saying that the 151 million tons, well, it's closer to 150% of what the United States capacity and around 80% of Europe's capacity. And to further put into context in domestic terms, well, they are saying that they took 36 years. The Aditya Birla Group took 36 years to get to around 100 million tons. And UltraTech has added the next 50 million tons in the last 5 years. So that's a record time that they've gone in there. They're also highlighting that they've outpaced the industry growth because in the last 2 decades, their capacity has gone up by around 11 times, while the industry has gone up by close to around 4 times. And they're not done. So from around 151 million tons, they've set their sights now on around 198 million tons. How did they do that? They've already have 35 million tons that's in the works in terms of expansion. Add to that the Kesoram Industries acquisition that they've already announced. So put it together, they're going to be at around 198 million tons in the next 3 years or so. And for this, they've committed a capex of close to around 32,000 crores. So UltraTech Cement proving that they're undisputed king of the cement space.
Okay, thank you very much for that. As we slip into a break, we have an announcement to share with you. We're launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate, a personal finance handbook with Sonia Shenoy, where she will be joined by 3 well-known experts on Saturday, 11th of May, 9 a.m. onwards. So block your calendars. They will be diving into everything you need to know to master your finances and learn to grow your wealth, be it insurance, tax savings, managing your portfolio, retirement planning. There's lots to learn. So whether you're in your 20s, 30s, or even 40s, this live webinar is for you. We have limited seats, so don't miss your chance. Register now. Scan the QR code to register or log on to cnbc-tv18.com, and we will see you on 11th of May. Welcome back. There is a new entrant in the equity mutual fund space. Trust Group, which already had a debt mutual fund schemes, is now getting into the equity space. Trust Group is run by Utpal Sheth, who's also the CEO of Rare Enterprises, and his wife, Deepa Sheth, who founded the trust and leads the debt capital markets activity. Veteran fund manager Mihir Vora is their CIO, Chief Investment Officer. Prashant caught up with the 3 of them to discuss more on their new fund. Listen in.
We are entering this space with a very long-term time horizon. We are taking a 20, 30-year plus view. And this is a long-term business, so it's never too late. Secondly, I think it is equally important to have the right team. So after we got our license, we started with the debt mutual funds first, but we were waiting to get the right CIO to start the equity venture. And we started when we got the right CIO. So Mihir is here, and we wanted to ensure that there was not just a capable and competent team, but equally a committed team. And that is what Mihir has built.
What's the USP for investors who may be watching this, for viewers who may be watching this, to evaluate whether to put money into what is, of course, the FlexiCap fund, the first product? What's the USP, Utpal?
See, rather than just the product, I think what this house brings to the asset management industry is more important. Okay, while we are a small player to begin with, I think we are a differentiated player. We bring an investing DNA to the mutual fund space. We bring a specialization in multiple asset classes, both equities and debt, that this house has been doing for quite some time. And while as a house, we've been under the radar, but we do have more than 20,000 crores of assets under management and advice across our asset management, wealth management, portfolio management, and other businesses and entities within the group. I think that differentiation in our investment philosophy will be evident over time.
A philosophy perspective, could you give us a sort of sense of what we are talking about broadly?
Sure. See, historically, most investing styles are pretty well known. You have value investing, you have growth investing, you have quality investing, you have momentum investing, and so on. The investing philosophy that we are bringing to the table here is what we call as terminal value investing. This is something that we passionately believe in, and it's not well understood or well appreciated.
Terminal value, are you referring to the DCF terminal value, or is this different from that?
It is, terminal value is a very nebulous value in fairly distant future. It's not a static concept, it's a dynamic concept. It's not a mathematical concept, so therefore it is not a DCF value. That DCF formula tries to capture an assessment of that terminal value, but I don't think numbers can capture that. And in my experience of more than 30 years in the financial markets, and with some of the veterans in the financial markets, or rather legends in the financial markets, I can tell you that nobody knows that terminal value. But getting the direction right is much more important than knowing the precise number.
Nipa, from a, as you've managed lots and lots of deals over the last 2 decades, over 2 decades on the debt side, what do you hope to bring as promoters of this business on the equity side? I mean, would you want to add to what Utpal said?
No, I think very clearly the idea is to have the best ideology and best principles of investments on that, and I think Mihir is best placed to take that forward. So
Mihir, let me come to you. As I said, you've got a long track record of institutional money management. What do you hope to do at Trust?
So clearly, as Utpal mentioned, what matters in a asset management house is basically 3 things, I would say. One is, who are the promoters, who are the fund managers, and what is the philosophy. So I think what we differentiate is in all these 3 aspects. One is that, as Utpal mentioned the word DNA, and as you rightly mentioned, nobody knows the equity markets as well as Utpal. Nobody knows the fixed income markets as well as Nipa. And I come with 30 years of institutional money management experience, building teams of excellence, consistency of performance, risk control, etc. So I think we have this potent combination of raw market understanding for equities, fixed income, and other asset classes, combined with the institutional experience. And the team that I've put together in the last 5 months is also of very high quality. So we are not cutting corners in anything. We are building a center of excellence for investments. And the investment philosophy that Utpal mentioned, terminal value investing, is something that as rightly mentioned, as he rightly mentioned, is not very well understood, but it's a very potent tool to identify multi-baggers.
Utpal, you worked with Rakesh Jhunjhunwala for 2 decades plus, right? What do you hope to get from what you've learned from Rakesh Jhunjhunwala? The intangible, so to speak, which you will hope to pass on as a mentor, as a guide for the AMC?
I've learned so much from Rakesh over the years. And he used to always tell me that investing is not an act of intellect. Investing is an act of wisdom. Right? I hope to ensure that at Trust Mutual Fund we build that culture of wisdom rather than just intellect. The second thing I would say is Rakesh used to tell us that the greatest risk of investing in India is not investing in India. And I want to be very clear that the investors that we are approaching do understand and appreciate that the greatest risk of
is not participating.
Investing in India is not investing in India. Rakesh, you also taught me that your patience may be tested, but your conviction will be rewarded. And I think equity markets have their own cycles. There are times when you underperform, there are times when you outperform. But through that, you have to be able to keep your state of mind intact. We want to do the right thing in the right way. We may not be the best performing fund always, and we will hopefully not be the worst performing fund always. But what is important is through the cycle, how do you behave? What is the consistency? What is the risk adjusted portfolio calibration that is done? And for that, I believe that we've built a very, very capable and committed team.
Mihir, you're starting with the FlexiCap scheme. Why a flexi cap scheme? Because it gives you the flexibility. And what will the portfolio construct be? Just give us some sense of what do you plan to do with the fund, the first one?
Sure. FlexiCap, frankly, is a natural choice to start with since it's our first one. It is the largest category. So while incrementally in the last 12-18 months, small cap funds have gotten more money, but in terms of absolute size, FlexiCap still is the largest category, so you can't not be there. That's one. And second is, in my view, there are about 900 stocks to choose from in the market.
Okay.
The consideration set, if I were to, not what we monitor actively, but in the consideration. So obviously the top 250 are large and mid caps, but then there's a long tail of stocks to choose from. So I really want to give myself and the fund manager the flexibility to choose across the spectrum, rather than taking a top-down call as to I want to be in large cap or mid cap or small cap. And second is, the scope for stock selection is so high that it's astounding how much even an index can vary, the index components can vary. For example, last year, in the calendar year, Nifty 100, which is the large cap index, was up by 10%, right? But the top 10 performing stocks in that index were up by 100%. And the bottom 10 performing stocks on an average were down by 25%. So 125% delta in the top and the bottom performers. And across the board, if you see, that's the behavior. So there's ample scope for stock picking across market caps. And that's why we believe that it's better left to the fund manager to decide.
Utpal, talk to us about what your ambitions are on the sort of equity side, on the mutual fund space. I mean, do you have like a target market share in mind? What do you want to get to? Assets under management, what you want to get to within a few years? Just talk to us about that.
No, like we talked about terminal value in investing, I think we are very clear that we would like to be a differentiated long-term player in the mutual fund space with who's relevant. I mean, at the end of our journey in mutual funds, I would not want trust to be insignificant. I think we have the potential to be a relevant player, and that is the aspiration that we are all working towards.
Okay, that's the word coming in from the new kid on the block, Trust Mutual Fund. It's never too late, to enter the Indian markets and play the equity up cycle. As Rakesh, used to say, Rakesh Jhunjhunwala, that the biggest mistake you'll make, in investing is not investing in India. We'll slip into a break on that note. We'll come back and get you more.
Markets are still pretty flat, so let's leave you with some nuggets that we got from the auto sector. Hyundai India has registered its best ever year in India with over 7.75 lakhs units being sold in FY24 with a 8% growth in March alone. And the company has registered a 5% growth in domestic sales. Parikshit Luthra caught up with Hyundai India COO Tarun Garg to discuss about the future growth trajectory of the company, IPO plans, EVs and a lot more. Take a look.
The last 2 years have been very good for the Indian auto industry. Of course, we had a 20% growth in N-2 year and then followed it up with an 8.5% growth in 23-24. As an industry, I think we have done very well. But that said, obviously the base is now high, at 42,50,000. So when we met all the OEMs, we met in the Siam conclave, looking ahead conclave in January. I think all of us felt that probably, fiscal 24-25, the growth could moderate to about low single digits. So we all had a consensus about 2.5-3%. But that said, I don't think we should be too much worried about it because a growth on highest ever numbers is not bad at all.
Mr. Garg, when it comes to the new EV manufacturing policy where companies can avail duty concessions, is that something that you would like to avail of? Are you interested in? Would you apply, considering you have a big EV portfolio, you have a company back in South Korea you can import from?
So basically, our teams are still studying it. As you know, it just came about 2 weeks back. So we are still studying, in totality. And I think once we are ready, we will be able to comment on that.
But what do you think about the contours of the policy? Do you think it goes against those who have done a lot of localization, or you feel there is a good opportunity there to increase the EV choice for the customers and increase the EV ecosystem in India?
Look, as I have already mentioned many times, that as far as Hyundai is concerned, we have a very strong BEV plan going forward. We are already invested into localization of battery packs, and we are also investing in the charging infrastructure. Ioniq has done very well. Our first high volume EV will come in early 25. And of course, after that, you will see more and more EVs coming from us. We feel that probably by 2030, EV penetration would reach about 20-21% in India. So we are very buoyant about the EV in India. And we also feel that government would have done their work. And whenever government is coming with any policy, our teams study it and we want to participate. So like I said, our teams are still studying it. And when we are ready, we will be communicating to you our strategy on that.
Speaking to you about the much speculated IPO, and this is expected to be the biggest ever in India, all eyes on that. How would you describe this moment in Hyundai India's journey, and how will this help the company in terms of future investments and expanding its presence in India?
Look, you already know the answer. I have no comments to mention on the IPO. As regards Hyundai's journey in India, it has been very fulfilling. And I think we have shown, not only have we shown growth in numbers, but if you see the brand, if you see the acceptance of our products, if you see the benchmarks going up, with every product, we try to raise the bar. We try to bring in global technologies to India. Today, we are very proud that we have EVs, we have petrol, turbo, diesel, CNG. We are investing into the Talegaon plant in Maharashtra, which will give us capacity of 1 million. So I think India is very, very important for us. And we'll continue to invest in India. We'll continue to build, image and have a very strong bond with the customers of India.